Good morning, guys. Again, appreciate you guys allowing us the opportunity to speak yet again. I think this is our third presentation. The first time we talked about was a little bit more on just the general home buying process. The last presentation we gave was an actual kind of experience on the consumer side. This time I wanted to kind of share again the difference. I'm sure most of us have either been homeowners or gone through a little bit of the mortgage process. We take things such an aggressive approach from a true advisory position, and that's kind of one of the things I wanted to go over from especially a lot of the different transitioning that's happening on the market. What are some of the things that we do and take it from there, okay? So again, as Dean said, personally, who am I? I've got my wife of 18 years. We met at college, freshman year at Rutgers, have been going strong since. I've got two beautiful kids, my 14-year-old daughter who's been working with us actually in the business for the last 2 summers. And I love seeing, obviously, the stuff that we do when we innovate on the modern technology side, but to kind of see her feedback and say, hey, we used to do this last year this way with the follow-up, and now it's been changed dramatically that way. She definitely loves that side. My 6-year-old son, who, if any of us have 6-year-old boys, he's a menace to society, right? You know, usually with our new office in Toms River, it's literally across the street from his school. So when school calls during the day, I try not to pick up the phone because chances are he either punched a kid or he's done something. I'm really cool with the principal. So, of course, my car is not that inconspicuous. So he knows I'm across the street, and he'll text me and say, hey, I know you're across the street. Shoot me a text. We've got 2 dogs, a German Shepherd and a Golden Retriever. They run the house, as I say, right? We just pay the mortgage. And again, very, very big for me. I always call the 4 Fs: faith, family, fitness, and finance, right? Next slide. Professionally, again, I'm the area manager for Got Mortgages. I've been in mortgages for a little over 9 years now. I do happen to travel, dramatically throughout the nation, right? We're going to Housing Wire in 2 weeks, actually, to speak at the George Bush Presidential Center for Housing Wire. That's essentially the Wall Street Journal for mortgages. So, unfortunately, that's taken up a lot of our time, but fortunately, it's gained a lot of, obviously, exposure. I also have, I mentioned it before, our Got Mortgages Cares Foundation. That is something where we actually go to various different schools, various different nonprofits, and teach financial literacy, things that we generally weren't exposed to when we were usually younger or our children in today's day and age, right? So again, what I always say, the difference between a mortgage loan officer and a mortgage advisor. A loan officer traditionally is always one that a client calls and they say, what's my interest rate? And my answer every single time is, I have no idea. The first goal we need to do is get off the phone, jump on an actual virtual call, and map out a specific plan for that exact same consumer, because every single consumer's path is going to be unique. I always call it the 4 C's when we're going over their qualification. We take a look at their credit score. We take a look at their capital in terms of their down payment. We take a look at their collateral. What type of home are they buying? Because that's going to range on the different loan program, whether it's FHA, VA, USDA, conventional, or bank statements, like some of the strategies we talked about earlier. And then the last one is capacity. Some of us have heard of it, debt to income, right? Once we're able to establish those 4 things, then we're able to do what's called a home and buying dreams call, and then formally go over what the best plan of attack is. We concentrate heavily on appreciation trends, which you'll see as we start talking further, how the market has been doing over the last 50 years. I talked briefly during my 60 seconds today about inflation. Most of us obviously see on the news right now, or as I mentioned earlier, about gas prices, right? Gas has slowly started to drop. I think it's about $60 or $70 a barrel. But inflation did drop 3.5%. It jumped almost just over 4% just in May, right? It's always a month lagged. It's the first drop in 5 months. But again, interest rates are still remaining sticky because we know with some of the geopolitical stuff, just as fast as it went up, just as fast as it went down, and vice versa, right? You guys will see here, and it might be a little blurry, but over the last 50 years, home price returns in the last really 50, 76 years, right? A consistent uptick throughout. There was only roughly just about 3 or 4 times, aside from the housing bubble of 2008. So top right corner, you guys will see 2007, we got a drop of 5%, 12%, 3%, 4%, 3%. And throughout traditionally the entire other 50 plus years, home values have always continuously appreciated. And again, this is from a national perspective. If we look at things truly on the East Coast, which you guys will see on the next slide, you'll kind of be able to truly get an understanding of where we're at if we're currently homeowners or if we're looking to tap into some of that equity, right? The average New Jersey home value is $584,000. That is up 3% year over year. 103%. Homes are still being sold 103% above list. Now, what I'm seeing, and Dennis can probably attest to this too, if a home is priced correctly based on comps, square footage, bedrooms, bathrooms, things along that nature, it is flying off the market. It is immediately getting multiple offer situation. But again, now if the seller is somewhat unrealistic or they were promised the world by a potential listing agent, those are the homes that we're starting to see as we're driving right throughout our neighborhoods, thinking that the homes are changing in the market. No, it's just overpriced. Plain and simple, supply and demand. In New Jersey, there's just such a shortage of homes, right? Less than a 1 month supply of homes. And when we start seeing some of the statistics that the market starts to talk about, there's so much new construction or there's so much available inventory, a lot of it is still builders that have not finished building their homes. I'm sure you could attest to it when you're doing a lot of their electricity, right? And most of these homes are not even in a move-in ready capacity. They're being sold for future purchases, right? 52% of New Jersey homeowners are equity rich. And then you guys will see here, a lot of this stuff on the tax returns. I've talked about this time and time again. Business owners who are taking advantage of obviously having their business, you do not necessarily have to file so much on your Schedule C or your net K1. Our bank statement loans, we take 80% of bank deposits. P&L, if you're a business owner, 90% of your P&L through the CPA, and we'd be able to talk with Perry. He'll be able to review their business tax returns or review their actual bank statements and take it from there. Super important. The equity side, we do a lot. I've talked about gothelocs.com, taking advantage of consumers' equity. We meet with every single consumer annually for an annual mortgage review, and quarterly, it's a text and phone call check-in to make sure what any changes is happening in their market. I believe it was just before the spring and summer, we had connected Dean with a little over 4,000 clients that we've closed in the past, letting them know it's about to be the spring and summertime, and you want to take advantage of that stuff, right? I've talked about Got HELOCs. It's so critical, guys. No appraisal, no closing costs, no traditional upfront process. You apply in 5 seconds and you're approved in less than 5 minutes. Next slide. AI. I talk time and time again, and I have that QR code at the top right. I had the opportunity to sit down with Steven yesterday, and we went through a lot of different AI stuff and what we're actually implementing into our daily business. So that's going to have different toolkits that we've built. The lab is how to run your business. The blueprint is various scripts of what we do for our business. And then the university is an educational guide in regards to the process. All right, guys. Thank you. Appreciate you guys.